Okay, welcome back, guys. So this is a second lecture in the onboarding series. The first one, I tried to establish certain foundation or ground rules for this course. Uh, and the mindset with which I'm doing it is basically I'm looking at all of you who are completely new to this landscape, who do not understand what trading is, you do not have any financial background. So I'll be talking about certain things which are really very basic in nature. If you're already aware of it, you can speed up that part and go through it fast. For those who are new, you can take some time to understand and grasp these things. So even if you feel a little, uh, overwhelmed with the knowledge, you can always pause, go through your own research. Like you can go to the Google or YouTube and try to, read more about it or research more about whatever I say. If you find it difficult to understand immediately. Uh, so now let's start. Basically, there is a lot of content already posted on the forum, and in the index futures lessons part, you can see I have already created a lesson called Index Futures Basics. So if you have gone through this, it will be uh, easier for you to follow along. But even if you have not, don't worry. I'm going to mention everything in detail over here. Before we get into the learning part, I want to know talk a little bit about note taking. You can go to the ground rules section. Sorry, not ground rules. Go to the start here section, and over here there is a thread on preparation for the course. So I've already opened that tab over here. Now, on the preparation part, I have initially created one live session that talked about how to study this course, but this was while I was covering the forex part. So this may or may not help you. It's up to you. You can go through it. Uh, but let me again reiterate certain things that I mentioned over there. The first and foremost thing that everyone encounters as a problem in this course is where to find the time to study this. And that is why I had mentioned something called as a time tracker sheet. You can just click on this link and it will download a file on your desktop. So I have that file open over here. It is an Excel sheet over here. And what this is basically is it is a audit of your own personal time. So I've given the 24 hours in a day, starting 1 a.m. to closing of that 12 o'clock. And every hour is now broken down into four 15-minute slots. So you want to fill out this sheet for your own self and find where are the time slots in your day-to-day life. If you have certain 15-minute slots, even 15 minutes are very very powerful when you use it correctly. So for the most part you'll realize that you are actually wasting a lot of time over here. There'll be certain things that will be absolutely necessary, like sleep. You cannot replace that. You will require certain amount of sleep, and you may have to block that part out completely. Let's say for the entire night until 6 o'clock, if you are, uh, going to sleep, you can just block out that time. Some of you may not be awake after 10 o'clock, so you can even mark that as sleep. And this is just for an example that I'm giving you. But this is how you will know where you can find time. So you may have certain engagements like in the morning some people go for a walk or exercise, so yoga or whatnot. So that part may be blocked for you. So maybe you will block out that 7 to 8 o'clock hour time. and then you have preparations and going for office and all, and some of you may find time around 1 o'clock or even 2 o'clock. So you can mark that as the time where you can study a bit, and you may have just half an hour at that time. So you can mark those two time slots as study time. But then this becomes your non-negotiable time slot. You want to pick up the material that you have made. You might have made some notes from the lectures that I have conducted. So use this time slot for your own study or revision, because this is where you will reinforce certain concepts that have been covered. Then you don't have to bother about anything that you are doing in the other time. If this is the time slot that suits you, some of you may find time around 5 o'clock or 6 o'clock. That's up to you. But that little time window that you find, that is the time you have to review your notes, or you have to make notes, go through the previous sessions if you have to. So this is the time that you would utilize for your study. Then in the evening, when right now, since we are in the January of this year, uh, the actual trading will become easier from February onwards ahead. So mid-February we'll have good movements in price, and it will be easier to trade during those you know times. So right now I'm keeping it light. I'm not covering too much of lessons or live sessions. But from February onwards we'll have regular live sessions. So when you have those live sessions, they'll be generally since it is daylight savings time right now, it starts at 8 p.m. So live session will begin around 8, not necessarily 8 every day, but earliest it can start is at 8, and it can go on until 9:30. So not just 8 to 9, but 9 to 9:30 also might be utilized. So that is the time period that you want to attend live every day. Let's say you are not able to find this time slot and you have something else. Someone might be working in day shifts wherein you are on the job around that time. Very few people do that, but if you are one of the affected ones and you are not able to attend these live sessions now, you will have to find out a slot where you can go through these recordings at a later time. So let's say I have covered this 1.5 hour live session here, and you are not able to attend it over here, but you have like half an hour to 45 minutes in the afternoon. So what you can do is you can speed up this live session recording and watch it at 2 o'clock. Ideally, it's better to watch it at the same speed at which it has been recorded, because this is something that I'm doing live, and you will have the pseudo experience of sitting with me live during that session. So that helps. But if you do not have so much amount of time, you can speed up that recording to go through during a different time slot. You may find time after 10 o'clock. So you can go through the live session once it is posted on the forum after 10 o'clock. But this time slot is something that you are going to use in your future for trading. So it's better you organize your life around this, and try and spare this part for your own trading. So that's something that you will have to work out in your own life. I cannot give you a custom made solution for yourself, but you'll have to consider these questions for your preparation. Later on, when we move into normal timings, that daylight saving times in US stop uh, from the second week of March, if I'm not wrong. So in that time window, the live sessions will shift 1 hour prior. So the earliest that they can be, start is at 7 p.m. So during those times, it might just go on till 8:30, and then you have nothing to do after 8:30 in the live session part. So this is going to happen from March onwards. So this is the time slot, and for the entire year until November end, we'll be following these times. So from 7 to 8:30 is what you want to be spared for your live sessions and trading part. Uh, so this is something that you will have to plan in advance. It doesn't just happen. And if you are not planning or organizing it, you are the ones who would be telling me that I'm finding it difficult to follow along the content, or I do not have time to study, or how do I spare time? It's not there. I'm so busy. So all those excuses will stop when you have planned your day like this. So that's a little bit about time part. And I'm actually going in a deliberate manner. I do not have any time plan for this particular lecture or session because I want to stress more upon those things which are important. Initially, when I made these lessons, I tried to keep them very short and crisp. But now I realize that certain things do need to be covered. So that's why I'm slow. So even if I have to continue this onboarding session for 4 or 5 lectures, I don't mind. So this is just the second part. So the first thing is out of the way. This is how you will track your own time and find the slots that you can for studying and all. Now the second thing is about note taking. Now, I had given a suggestion of how to use a Cornell method for note taking. It's a very simple concept wherein the page is by itself just divided into certain sections. The topmost part, it's about the title or the topic that you're going to learn about. The left margin, like this, this gives out the key headings that you're talking about. So let's say if I'm talking about fair value gaps, so the name fair value gap will come over here, and what it means would be given out in definition or in a shape of drawing or something on the right side. So that is how you can organize your notes. So the key concept, the names have to be mentioned in the left margin, and on the right side, you can explain that in your own words. Why I stress upon this is I have noticed in number of classes that I have conducted, most of the students, they go through these concepts and then they name it in their own language. So the fair value gap, while that is very common, people do remember that name, but they would call it something else, or the name like let's say absorption of liquidity, they would say liquidity grab. It's a completely different term. I would encourage you all to stick to the terms that I am referring to while I'm indicating those things. uh, it it will, because it is all algorithmic. That language will help you put everything together at the end of it. But if you keep changing those terms and keep referring to them in a coolly cool manner, it's going to make it further difficult for you to rearrange those things in order when they are required in future. So please remember to mention all those things like volume imbalance, or uh, the there are certain terms that they need to be referred to in that particular manner. So please remember to jot them down while you're listening to all these lectures, and you can take your additional notes on the right side. In the bottom part, this is where you write the summary of whatever you have learned. This need not be made immediately on that lecture, but when you review your lectures, maybe 1, 2, 3 times, when you come back to it in future again, you will have certain more insights that you glean from that. So that is what you start jotting over here. This portion can be left open while you are making those notes, but later on when you revisit that, you can write those summaries over here. So this sheet per se, I have given a template in a document format, but you can just hand draw it in your own notebook. You don't require this to be printed. and you can certainly do it in any digital form. And that brings me to the point wherein people discuss, should I have digital notes of this course or should I handwrite all my notes? Uh, the initial part, manual note taking, would uh, go well with you because that is where you would be writing all theory. But as we progress with the live sessions and day-to-day markings will increase, you will require screenshots of the charts that you will be watching during the live session. You will be marking your own charts. So those charts can not be, put in your manual notebook. So you will have to transition into uh, having a digital platform to make your own notes. So there are a lot of options. One that I can suggest to you is Microsoft OneNote. So OneNote is again a very easy way of capturing notes. Uh, when you go into the file, you can create a new notebook, give it whatever name like FTP course. You can go inside that notebook and over here you can create the sections. Let me one of five. Let me just show you how you can create one. So once you have OneNote open, just name a notebook, notes, create a notebook. Now in the notebook, I guess normal view. Okay. So in the normal view, you can now see the notes has new sections, and every section can have any number of pages. So once you keep adding, you can have like lesson one. I can rename this as lesson one, and whatever I want, I can type it over here, or I can have screenshots that can be taken from my chart. Let's say there is certain chart that I have been, tracking, and I can just take a screenshot of that, come back inside this platform, and I can paste it. That chart just comes up. You can resize that. You can write notes over it. So this is a platform wherein your note taking can become easier, and then you can keep saving this in your local PC, or you can have it on your cloud. So that's up to you. But this is something that will help you going forward. This is one way of making notes. Another is you can create a folder in your own PC, and you can just keep saving the screenshots that you have been taking. But later on, it doesn't help you with organization. So another way that I was doing it initially is I would use a PowerPoint um, presentation file, and whatever screenshots I take, I would put it in the slide format. So every new slide would have my new screenshot or markings. So even that can be used if you do not have OneNote, or so you do not have any other note-taking platform. So that's about taking notes. Now let's start with the index futures part. So when it comes to index futures, it's built of two words, index and futures. So before getting into futures, let's understand what index means. So here we have a Google screenshot, basically a Google page giving out what US stock indexes are. So there are a lot of indices that are actually present in the United States stock market. When you click on this, you will see what it actually means. Dow Jones Industrial Average is one of the indices, one of the four most prominently tracked indices. So this one consists of 30 prominent companies listed on the stock exchange. So on an average, it is basically tracking the progress of those 30 companies listed on the stock exchange. So Dow Jones Industrial Average is one. Similarly, S&P 500 is another, wherein it has the 500 of the largest companies listed on the stock exchange. So the basic index, what it tracks is those 500 largest companies. So S&P 500 is the index that we'll be using for our index futures trading. We'll get into futures part later, but you need to understand that there are a number of indices that can be tracked for US market. So there is another one called NASDAQ Composite. So in this course particularly, I'll be focusing on S&P 500. S&P 500, while over here it is just an index cannot be traded. You have to uh, use a derivative of this index to actually trade it. So you cannot just buy S&P 500. You'll have to buy a contract of S&P 500. So that comes in the futures market. So how does that look? Let's go to a site called barchart.com. And from this tab over here, just click on select a commodity, and you can scroll down. Now, these are all commodities that are traded in form of a futures contract. So when you scroll down to indices, you will see there is a index called S&P 500 E-mini. So there are two types of futures contracts that can be traded. So the first one is E-mini contract, and the second one, you can see the name is repeated over here, S&P 500, S&P 500. The first one is E-mini, and the second one is micro. So what I ask you all to do while you practice and you participate in these markets, I suggest you all follow the S&P 500 micro. Now, what is the difference between a micro and e-mini? Is basically e-mini is a standard contract. This one. So the standard contract is larger in size. The value of the contract is higher than micro. So e-mini micro, oh, sorry, not e-mini micro. S&P 500 micro is 1/10 of S&P 500 e-mini. And how they are different, we can just see it by comparing them in a parallel window. Let me duplicate this tab. Sorry. So in one we'll have e-mini, and in the other let's have a micro. Okay, so let's see how they differ. Okay, even before we go into that, let me talk a little bit about the index futures part. Now, when it comes to index futures, they are traded in terms of contracts. And the peculiarity of futures is the contracts expire at a certain point in future. So right now, S&P 500 E-mini, the current contract is March 24 contract. The March 24, you can see over here, this is the first contract mentioned in the list. The first one is cash, which you ignore, you do not track this. The second one is the first contract. So now this particular index expires every 3 months. So the first futures contract is ESH 24. H is basically meant for tracking the month of expiry. So every contract that expires in March will have this symbol in between. So ES is the short form for E-mini S&P, and H is the month, and 24 is the year of expiry. So every year you will have these four contracts that will be traded in, as part of futures. So first one is March 24, second is June 24, third is September 24, and then December 24. Once the December is over, again March, June, September, December. And the letters are H, M, U, and Z. You need not remember that. Your trading platform will already give you that. So, and the trading platform that we use that doesn't have this H, M, and U. It will just say E-mini S&P March 24. So we don't have to bother about it. This is just a additional input that I'm giving you. So this is where how the contracts are listed on the exchanges. So at the same time, all the three contracts over here are open to trade. You can see the values changing over here. So there are people who would be trading September contract right now because those large entities, they are basically using it as a hedging part of hedging. Uh, so that's why all the contracts are available to trade at the same time. But what we will be preferring is the contract which has the largest volume in it or largest open interest. So that is the contract which is actively being traded in the market right now. So you can bookmark this page and track these values going ahead. Whenever the expiry for March will be near, this open interest is going to reduce, the volume is going to reduce, and the next one, both these numbers will be higher. That is when you should switch from March contract to June contract. And I'll again remind you while we are closer to that, but this is just additional input that you have right now. So now we want to go into the details of what that contract means and how it works. So let's click on the name of this contract. You want to scroll down and click on the see more button over here. Now I'll also open up the same option for micro contract as well so that we can compare them side by side. Let's click on see more. Just put it as a separate window here. Separate window here. Okay. So now on the left, I have E-mini standard contract of S&P 500 and a micro contract of S&P 500. So you can see the symbol is ES for E-mini, whereas for S&P 500, the exchange symbol is MES. Okay. So the contract name over here is E-mini S&P, whereas it is E-micro S&P 500. We'll be referring to it as MES. Now, what's important is to understand the value of the fluctuations that happen in the index. So there is something called as tick size. Now, what this tick size means is whenever the value of this, now this is the current price of the contract over here. This price generally moves up and down in the multiples of 0.25. That's how it is written, 0.25 points. So there'll be these two digits after decimal, they'll always be a multiple of 0.25. You'll not see 4782.23 or 21. You can see the fluctuation over here. It is in multiples of 0.25. So this decimal is basically the smallest tick value that the price fluctuates in. So the smallest value is 0.25 points. So since it is 0.25, 1 point consists of four ticks. So once the price moves up by 4 ticks, this last digit over here, it will go up by 1 point. So that is how the correlation of ticks. Now there is something called as tick value. Every tick, that is 0.25 points movement, would fluctuate your profit or loss by $12.5 for a standard uh, lot of S&P 500, that is E-mini S&P. Whereas when you look at a micro contract on the right, while the tick size is same, the value of it reduces by 1/10. So you can see the $12.5 dollar per contract has now become $1.25 per contract. So micro is a smaller contract as compared to E-mini S&P, and we'll be trading this particular contract while you are practicing how to learn this. Now, the reason for the smaller size contract is for the standard contract, when you trade it in the exchange, the margin that you have to maintain in your account. What margin means, you have to have that much amount of money in your account to be able to buy or sell one single contract, that is one e-mini contract. So at least $12,980 would have to be there in your account for you to be able to buy or sell one contract over here. But when it comes to a micro account or micro contract, all your account needs is $1,298. If you have this much, you can buy one micro. So that allows us to, buy multiple contracts of micros. Like if your account has, let's say, $20,000. So $20,000 would help you buy. Let me just give you this thing. Let's do it like this. Let's say $25,000 is your account balance, and the margin maintenance over here is 1298. So you can buy 19 micro contracts with the amount of money that you have in your account. So that is the purchasing power that you have when you are handling the or trading in micros. But if you are doing it over here with the standard contract, then with the minimum margin that is supposed to be there, it is 1298. You can buy 1.92. So you cannot split that standard contract into points. So all you will be able to do is just buy one standard, uh, that is one e-mini uh, lot using that $25,000 account. So you have very little flexibility in terms of number of contracts that you can buy. So that's why I will prefer trading with a micro. Now, the daily limit part and all, it's not very important to understand right now. This is basically just to, you know, when a market is trading fast and, the value of that particular index, it goes up by 7% or 13% or 20%, basically below the settlement price of the preceding session, it will stop trading. So they'll just stop people from buying or selling this instrument during that particular session. So that's basically how they halt the trading. Not very important for us right now, so don't bother about it much. The contract size. Now, contract size is basically one contract when it wait, break this down. Basically, when you make one point with one single e-mini contract on this, your basically profit or loss would be $50 because every tick that you make, you are making $12.5. So for one point, you will be basically making four ticks. So $12.5 into four ticks, it will be $50. That's why this is the uh, contract size. So one contract, when you are trading just one single e-mini contract and you make a profit of 1 point, basically that would mean you have made $50. So that's the value over here. But while you are trading the micro contract, then every tick will make you $1.25 over here. So when you are making $1.25 for one tick and you make four ticks, you'd be making $5. So every point that you make in micro E-mini S&P, you will be making $5. So that's the value or tick value and relationship between the increase in number of points. So let's say you buy it right now at 4778, and the value of this micro goes to 4780. So let's say you bought a micro at 4780. Let's say you bought it at this. Sorry, I had mentioned something else. 4778. And then the value of this index goes up to 4780. So that means you have made 2 points. So when you have made 2 points, you will simply multiply the number of contracts. Let's say you had just bought one contract by the you know tick size or the contract size. One into five into number of points. So that will be like $10. So that's the calculation. Let me, how do I show it to you again? Let me show it to you on a chart. It will be easy. Okay. Now, this is the chart. Let's say, now don't bother about what it means. I'll also go into basics of chart. I'm just using this chart to illustrate where or how do you calculate your profit or loss. Okay. So let's say you bought at 4774. So this is the price at which you have bought this contract, and the value of contract, it starts going higher. And let's say you close your trade over here while it has reached 4785. So a contract that was bought at 4774 and sold at 4785. So 4785 minus 4774. So you have made 11 points on this contract. So if you had been trading just one single contract, then 11 points into $5, you would have made $55 on this move from here to here. But let's say you were trading two micros, then you just multiply this 55 into two number of contracts that you have taken. So that's how your profit is calculated. Similarly, if it goes against you, like if it you bought it at 4774 and price goes down to 4771. 4774 is the buying price, and the price goes down to 4774. Sorry, 4771. So you have lost 3 points. So what would be your loss? Basically, 3 points into number of contracts into number of or the value, that is the contract size. So the contract size is $5 into, if you have bought let's say two contracts, then you multiply it by two. So you have lost basically $30 by price going below it if you had bought two contracts. But if you had just bought one contract, it would have been a $15 loss. So that's how the profit or loss is calculated in the trading for index futures. So now what we have over here is the information basically about these contracts. So we have covered the contract size. Now the months I have already spoken of. There are 4 months basically for expiry. So the first one is March, the second is June, third is September, and then December, and these are the letters associated. It's the same for both micro as well as e-mini, so it doesn't differ. The only place where it differs is this contract size and the tick value. So one tick in standard e-mini S&P is $12.5, and in micro is $1.25. The contract size, that is 1 point, value of 1 point of the micro is $5, whereas value of 1 point in e-mini is $50. Now the trading hours are same for both, and CST is basically Central Time for the US. So you will have to calculate your own time window as per the Central Time. So the quickest way to do that is basically using Google. You can convert CST to IST. So CST to IST. So when you have this, there is a, converter, or there are so many tools basically. But what I prefer is this World Time Buddy website. It is very easy to locate the timings in correlation with each other. So over here, I'll show you. mm, Looking at this time window, 5 p.m. So 5 p.m. CST. So going ahead, this is the PM. So 5 p.m. is basically half an hour prior to this one. That is basically 4:30. So 4:30 Indian Standard Time is when the trading hours for E-mini begin on a Sunday. So 4:30 in the evening, Sunday, the market opens for S&P 500, and 4 p.m. is the closing time. 4 p.m. is basically again over here EST is PM has to be here. This is the 4 p.m. So basically 3:30 in the morning for us. So 3:30 in the morning for Indian Standard Time, the markets, US markets close. And what is the so that is basically the opening time for trading from Sunday to Friday. So on Sunday, this is the time when it opens, and Friday, this is the time it closes. Otherwise, it is open for a trade throughout during those days. Now, what again you need to remember is the last trading day. Third Friday of the contract month is when this contract will expire. So once this contract expires, you cannot trade over here. So if you are, let's say, on a Thursday involved in this particular contract and you do not close your position, the next day the contract expires and you are stuck with whatever you have bought or sold in that contract. So you have to be mindful that before the third Friday of that contract month, you have to switch your contract. So you do not trade this contract closer to the expiry, and I have already told you how you would be shifting to a new contract month. Basically, you would be tracking the value of volume as well as open interest. So the contract in which this number is higher. So let's say at the expiry, these numbers are going to reduce, but the next one would have higher numbers. So that is when you switch to the new month. And how to do that, we'll do it in the platform once we get there. You don't have to worry, it's not a very technical thing. In fact, in Ninja Trader, it will by itself prompt you to switch to a new contract. So again, that is not a big deal, but you have to remember that you have to switch the contract before the contract expires for trading. So that's about the basics of the futures contracts. I would encourage you all to go through the uh, basics lesson that I have already posted on the forum over here, the futures section. So there I talk a little bit more into details of what futures is, and all those things which I have visually shown you right now are already mentioned in this. The next lesson is going to be about Ninja Trader, the platform and how to use it. But before I get into the trader part, I would also be covering the basics of chart, because that is where I have found a lot of people wanting, in terms of understanding how a candle forms and how it works. So I'll spend some time covering the basics of chart, how it forms and how it works, how to read that chart. And then we'll switch to the Ninja Trader 8 platform, which is the one we'll be using for our trading. So that's all for this session. See you in the next one.